here we are. We're at $100,000. All the naysayers who have been saying that it's just a Ponzi, it's a tulip, it's it's some sort of scheme that everybody's going to lose all their money in. You can't deny that this thing is just continuing to grow. The ecosystem is growing, and there's a lot of excitement about it. And so when you have $900 trillion of global investable assets, and Bitcoin is just 0.2% of that, it's got a long way to go. If it just becomes 1% of total assets, of those investable assets, it's $450,000 per coin. So that's where we're headed. Whether or not we get to 200,000 this year or next year, not 2025, but in 26 or 27, I see it going much higher. And because of that demand to own it in people's portfolios as this pristine store of value.
The rise of Bitcoin to $100,000 threshold represents a turning point in the financial industry. James Lavish draws attention to how this crucial price point solidifies Bitcoin's standing as a respectable asset class and encourages institutional investors to reconsider their holdings. With a market valuation of around $2 trillion and a ranking in the top 10 assets globally, Bitcoin's acceptance and infrastructure are developing at an impressive rate. According to Lavish, Bitcoin is in a unique position in the current uncertain economic environment because of its dual function as an inflation hedge and a store of money. He likens the rapid rise of Bitcoin to that of gold, pointing out that although it has only risen to a tenth of gold's market value in just 15 years, Bitcoin still has enormous growth potential. Bitcoin's existing 2% portion of the nearly $900 trillion in global investable assets highlights the potential for exponential growth. Lavish predicts that Bitcoin's price might soar to an incredible $450,000 with only a small 1% allocation of these assets. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
So after the election, Bitcoin had been consolidating for a long time, for months, in this range of 45 to 65,000, just kind of consolidating in that range for so long. And then after the election, you get a few weeks after, and boom, it takes off, it breaks through. And now there's been, it's blue sky from that 70,000 level to 100. And so now we've been bumping around right about 95, 100 for the last couple of weeks. And so and that's been also a pretty big deal, and that's giving confidence to people that, okay, this is a real asset class, and it can't be ignored anymore, because of what you said at the beginning of that question, which is that 100,000 level is just such a mental level. I'll tell you that when I started looking at Bitcoin for the second time, I ignored it the first time, and I did ignore it the second time. I had this gut sense. I said, Bitcoin was trading around $3,500. I said, this thing's going to be $100,000 one day. I just know it. You can just see it. I got warded off it by traditional investors, analysts and tech analysts and portfolio managers in traditional investing space. They told me it was a Ponzi scheme. That was crazy. So I ignored it. Biggest mistake in my investing life. But here we are. We're at $100,000. All the naysayers who have been saying that it's just a Ponzi, it's a tulip, it's some sort of scheme that everybody's going to lose all their money in. I mean, you can't deny that this thing is just continuing to grow. The ecosystem is growing, and there's a lot of excitement about it. And so the $100,000 level it's a really big mental spot. And I would say, I would be very surprised if this is not up between 50 and 100% this next year. And the reason for that is that all of the catalysts I just talked about, and when it holds this $100,000 level, it just continues to become this asset that allows for the institutions to come into and come out of it with ease. Now we bump up a true $2 trillion asset, and we're in the top 10 assets in the world. Like, this is it's incredible how much this thing has grown. And so what I believe is going to happen this year is that it's going to continue to be taken seriously, and that it's going to continue to be seen as a separate asset class. And that understanding, this is the key. The key is the understanding from the institutional world to understand why it's different. And as investors understand that, they're going to allocate to it uniquely, differently. They're going to take a portion of their book and allocate to it. And so when you start getting, the fact of the matter is, Julie, is that the Bitcoin currently is just under 2% I'm sorry, just under a $2 trillion asset, right? And, it's 1/10 the size of gold. So you'd say, yeah, but it's only 1/10 the size of the gold. Yeah, but it's 1/10 the size of gold in 15 years. Gold's been around for thousands of years, and this is a new store of value. You're starting to hear people on television shows, on mainstream media, which is interesting. You're starting to hear people say, well, this is a store of value. It's a store of value. It's a store of value. And so people are hearing digital gold. And so when you have $900 trillion of global investable assets, and Bitcoin is just 0.2% of that, it's got a long way to go. If it just becomes 1% of total assets, of those investable assets, it's $450,000 per coin. So that's where we're headed. Whether or not we get to 200,000 this year or next year, not 2025, but in 26 or 27, I see it going much higher. And because of that demand to own it in people's portfolios as this pristine store of value.
James Lavish recognizes the challenges that Bitcoin faces, especially the unpredictability of U.S. regulations. He notes that the previous administration's strict approach to cryptocurrency made things difficult and deterred firms and investors. Lavish is optimistic about the new administration's more pro-crypto stance, nevertheless, and the hiring of pro-crypto leaders to high-level roles. However, Lavish cautions that central banks and established financial institutions are unlikely to give up control without opposition. He draws attention to the continuous movement to replace Bitcoin with central bank digital currencies, CBDCs. Despite these obstacles, Lavish is still optimistic that Bitcoin's economic benefits and technology advancements will ensure its success in the long run. Now let's get back and hear from James Lavish himself.
We've never had debt to GDP this high, in the modern era. We're like 124, 125% debt to GDP. I mean, we have a problem. So the bottom line is, and the actual punchline of all of it is, Julia, is that no matter what we're doing here, no matter how we get there, all roads lead to inflation. And, Lynn Alden likes to say this, that nothing stops this train, is the way she says it. She's got that great meme that she has, but it's what I've been saying. It's the same thing Luke Groman's been saying, is all roads lead to inflation, period. I don't see another way. And if somebody can come up with another way and show me how this would work without absolutely devastating the economy, and then having the need for a massive QE, like we're talking about, QE infinity, like multiples of the last time, which would happen if we drove the economy into the ground because we're so financialized. I don't see a way out. I don't see a way to get away from inflation. It's going to happen, which is why I think it's so important to own assets and to keep yourself protected from it. Well, you've got a lot of things that have happened this year, right? You've had, which have been great catalysts, and there are new catalysts that are coming, and they're not fully priced in, but they're not being ignored anymore. And this is really important. So the big first catalyst was the ETFs. The ETFs made it super, super simple for institutions, family offices, small pension funds, small endowments to come in and start buying Bitcoin and putting it on their balance sheet as a separate asset class without having to do anything different. Well, the second thing that's happened is just recently is now you have options in ETFs. Well, that gives other institutions the ability to hedge risk on it, and manage their risk management around it. They can manage liquidity around it, especially proprietary books can do it, family offices can do it, hedge funds can do it. It's been a big development to get options on it, and it just further solidifies that this is a real asset class. The third thing that's happened is you had the FASB accounting rule. So now you've got this accounting rule that it used to be if you bought Bitcoin you're a company and you put it in your treasury, right? Like MicroStrategy. We can talk about that in a second too. But when you put it in your treasury, right? If Bitcoin went down, you had to take the worst price of what your purchase price was, or the lowest price it went to, and it was held on your balance sheet as an impaired asset. That's the way it used to be. Now, starting this month, anybody who's in the fiscal year December or starting next year, all companies can now buy it, and now they're marking it to market. So you don't have to take it as an impaired asset anymore and carry this impaired asset on your balance sheet that just destroys your ratios. So that's a really big deal that people are not really thinking about. That's going to be helpful for companies who want to hold it on their balance sheet. That's another thing. Then you get this other thing that's kind of hanging out there now. And we talked about Trump and, and this favorable administration. Well, this administration has been extremely favorable that's coming in compared to the last one. The last one's been vicious. It's been absolutely brutal. I've felt the pain from Choke Point 2.0 with my hedge fund. They have been attacking Bitcoin and cryptocurrency companies for years now, and it's been brutal. And so they're out. They're no longer going to be in charge. Gensler's out. You've got new SEC chair. You're going to have new banking, oversight committees. And so it's different. Well, now that what's hanging out there is the Bitcoin Act. And this is spearheaded by Senator Lummis, Cynthia Lummis, who's from Wyoming. And she wants to create a Bitcoin reserve. And so what she's trying to get passed is an act that will have the U.S. government buy 1 million Bitcoin over the next 5 years, which is 200,000 Bitcoin per year, and then hold it in U.S. Treasury as an asset. So, that's a big deal.
Let's consider the significant advancements James Lavish pointed out as we come to a close. Due to revolutionary factors that are changing its place in international finance, this year has been crucial for Bitcoin. Lavish highlights the significance of Bitcoin ETFs, which have made it easier for institutions, family offices, and even tiny endowments to access Bitcoin and allow them to treat it as a separate asset class without changing their fundamental business plans. The addition of Bitcoin options in ETFs further improved accessibility by enabling investors to better control liquidity and hedge risks. Two crucial elements in establishing Bitcoin as a respectable financial instrument. Lavish also talks on the latest change to FASB accounting rules, which is another important milestone. This change does away with the antiquated practice of listing Bitcoin on balance sheets as an impaired asset. Businesses may now mark Bitcoin to market, which greatly increases its appeal to corporate treasuries and reduces worries about distorted financial ratios. Lavish thinks that by encouraging more businesses to use Bitcoin as a reserve asset, this shift will pave the way for wider acceptance. According to Lavish, these developments are revolutionary rather than simply gradual. They make it possible for Bitcoin to play a crucial role in national and corporate financial strategy. Remember to like the video, subscribe to our channel, and enable notifications if you thought these insights were helpful so you can be informed of any new developments in the cryptocurrency industry. We'd love to hear how you think these developments may affect Bitcoin in the future, so please share your ideas in the comments section below. And as always, happy investing.